Well, hello, Kevin Kerr here for Commodity. We have a lot going on. The markets have been trading wildly. We're seeing still very good volumes considering it is the holiday season. We usually start to see things slow down from this period, about the 15th, until through the new year, until about the 5th or the 6th. People take vacations, they're away for the holidays. And so we just see a major slowdown as people kind of focus on the holidays and wrapping up their year end. A lot of traders close out their books early on, so they're squaring their positions, and we may see some volatility attributed to that. But you can expect thin holiday trade between now and probably the first week or so in January. So we have a busy morning this morning. If you were up overnight with me in Europe and Asia, you know that we've seen some bad news for Spain being downgraded because of the debt situation. Greece, meanwhile, is having huge riots, almost in every sector, it seems. Workers are striking based on pay problems, huge pay cuts that they're taking. Some are saying it's ratcheting back pay, 20 years. Some of the mass transit workers, air traffic controllers are striking, blocking all flights in and out of Athens. We're seeing teachers, doctors, you name it, striking in Greece. This is a real foreshadowing, I think, of what we can expect to see coming in places like Ireland and possibly down the road Spain or whoever is next on the buffet line for IMF money and for EU bailout. But we can see the story right here on your screen. Greek strikers halt flights, buses as bailout bites. I mean, it's a big story. It's all over Bloomberg. You can catch it on there. This was a great story, actually. It gives you all the details, how much money we're talking about. So it's significant, I think, looking forward to what's going to happen with some of these other countries facing austerity measures and the dissatisfaction of the people live in those countries. Now, here in Estonia, we're moving towards taking on the euro January 1st, and it's actually, popularity of it is actually at an all-time high or close to it. I think that may change after the actual switch on January 1st, and people start to see prices rise. But for now, it's still being looked forward to here as a big entree into the European Union. And this country, Estonia, and many of the Baltics, to me, are like the red-headed stepchild of the EU. When they tell the weather out of the UK, they don't even mention this far over on the continent. So this shows how weak and susceptible the euro is, and I think this news out of Spain is horrific. The downgrade couldn't come at a worse time, probably overdue, but it's obviously hitting the euro hard today. If we take a look at the trading screen, let's pull up our trading screen here on QST. We can see right there, we can see the euro down significantly overnight. Now, it was down to 132 in the March, 132.8, but here we're back up a little bit. We bounced off that a little bit. The dollar up about 45 for the March contract. We had hit about 80.22, and as you can see, last is trading, at least right now while I'm recording this for you, about 80.14. So lots of activity in the currencies today. Yen selling off on more bad news out of there. Just not sure which direction that's headed to next, but I think it's down. As we switch over to look at the grains and what they did overnight, fairly benign. After our big rally and then huge sell-off yesterday in the wheat, we're still seeing some more weakness. A lot of the guys I talked to, and myself included, believe that a lot of these factors, Australia, poor weather elsewhere, have already been figured into the price, and that helped run it up to where it was. Now we're seeing quite a bit of a stall. Now, while wheat has remained strong, and the grains may still have some upside potential, we're really seeing the problem with milling wheat, which doesn't really affect Chicago. We're going to have plenty of feed wheat, and because of the poor crop in Australia, that can be used for feed, and it's probably going to have more of an impact on corn, a negative for corn. Not sure how much of a negative it's going to be for wheat, and since in Commodities Watch we are long wheat, I'm a little disappointed in this position, but I do think there's more downside as some of these funds unravel their position and realize that the upside potential may not be all that great either. So we have some time on this trade, and hopefully it won't find more legs, and we'll see it. We'll see some of that fun money get sucked out. But for now, it's just a hold. As we move along, we can see again grains are down across the board. But as we move over to the energies, also taking a hit today on a stronger dollar. crude just does not want to get through that 90 level. It's a key level. We'll get the inventory numbers and we'll see what that does. But with that weaker dollar, with the stronger dollar, 90 is just a formidable technical and fundamental target. And while I think it could trade through it, I don't know how sustained it could be above that unless we continue to see huge drawdowns in the crude and the products. And again, we're seeing crude and the products down, including natural gas, across the board today, all red. Over in the metals, a big down day again for silver. Just a seesaw with silver around that 30 mark. I think we're going to continue to see that. Longer term, we're very bullish silver. We took half our positions off in CW to lock in some profits, about 49%, something like that. And we'll continue to hold it. We got out actually better than it's been since. I think it's the option spread trading about 37, but we took out at 40. So, very pleased with that. But this is a long-term position, and silver and the rest of the metals longer term are going higher based on hyperinflation, in my opinion. So we're and demand. So we're bullish long term. Short term, we got to lock in some profits where we can. And lastly, we don't have any positions in this in the commodities watch, but looking at the softs markets, crazy market in juice. I grew up in the juice market, so I don't mean to disparage it, but it's a very thinly traded market. We had hard freezes down in Florida, record low temperatures, so you're seeing that volatile move and then a volatile move back down. Juice I would steer clear of. It's very difficult to trade unless you can scalp, and most of us can't effectively. So, it's interesting to watch, but difficult sledding in there. Sugar also down pretty much in the front months today, and other than that, fairly quiet. Bonds just down, I should say up a little bit on the 30-year overnight, but just a mixed bag there, and we'll see what happens in Europe today. So that's a quick read on the markets as you're waking up this morning in the U.S. And for those of you having lunch here in the European Union, if you're not in Greece, have a nice day. If you're in Greece, go inside. I'm Kevin Kerr for Commodity Confidential TV. We're actually going to be doing this every week on our Commodity Confidential issue. It's going to be a lot better. This is our first one, but we're going to have guests, we're going to have special reports, and lots of other good stuff. So bear with us as we get the technology up and running, and enjoy your trading day. Have a great day. I'm Kevin Kerr in our offices in Tartu, Estonia. Bye now.